Hi everyone and welcome to Crypto Talk, that Irish guy that talks about Bitcoin. As of today, Bitcoin is down nearly 70% from its all-time high, and the entire market is a bloodbath. Welcome to Crypto. Okay, let's get the basics out of the way. This is the Kraken daily chart and Bitcoin is trading at $21,275. Let's take a quick look at what I said in my last video. I'm just trying to see what happens. If you get another rejection off here, then this is what's called a descending triangle. And they tend to break to the downside, so quick price calculation on that from the top of the triangle down to here. So then if, let's say, it broke out here, you could be looking at a price target of around $22,000, and I wouldn't rule that out. I don't think we're going to go below 20,000. Okay, so I predicted the price would fall down to $22,000 and stay above $20,000. Now it did fall down to $22,000. It fell lower than $22,000, and at its lowest point in today was $20,089. So yes, it did hit that 22,000 price target that I spoke of in the last video. Fell below that, so far down, fell as low as $20,089. Still hasn't fallen below $20,000, but there is nothing stopping it. Now the reason I said in my last video that I didn't think it would go below $20,000, which it hasn't, but you know what, it's not looking very well for it. The reason because we haven't had a situation before when Bitcoin has gone from a bull run into a bear market, and the bottom of the bear market is lower than the previous all-time high of the previous bull run. So obviously the previous bull run, not including the one we've just gone through in 2020 and 2021, the previous bull run was in 2017. Bitcoin topped out at $20,000, then went into a bear market for 2018 before recovering and bottoming out at the bottom of bottomed out in 2018, December 2018. So we've never had, but that bottom was still higher than the previous bull run's peak, the previous bull run's all-time high. So basically the bull run which happened before 2017, before that halving. So that's the way it's gone. You have a halving in 2016, late in the year 2017, after a bull run, Bitcoin tops out at $20,000, then it goes into a bear market. We've had another halving. That's when the Bitcoin supply gets cut exactly in half. It went from 12.5 Bitcoins per block or every 10 minutes down to 6.25, which is the current block reward. Basically every 10 minutes, a new block gets added to the blockchain, and 6.25 Bitcoins are awarded every 10 minutes to the miners. Now, the previous all-time high of the previous bull run was $20,000. So now we're in a bear market. I definitely think this is a bear market. I mean, we've lost 70% of our value. It's gone from $69,000 on the 10th of November down to what we are today. The lowest point was $20,089. Still hasn't gone under 20,000. But just because it hasn't happened before doesn't mean it can't happen now. Bitcoin can just do it at once. The world today is not the same as say 4 years ago, and also Bitcoin is not the same either. There's so much more going on. Now, I want to take a look at a few little things. So the RSI is so low. Like the RSI now is currently 22.119 since actually TradingView updated these. The RSI used to just be one indicator here, but now they have a trend as well. I always double take when I look at these. So currently the RSI is 22.16. So that's on the daily. It's a sign that it kind of is oversold. The closer we get to zero, the closer we are to being oversold. And these low RSI levels historically have been good buy indicators. We're also well below the EMA ribbon here, this collection of moving averages, this ribbon here, which is made of red, orange and yellow. We're well below that, and we're also below the 200, the 50 and the 20, the 50 and the 200 simple moving average. So we can get rid of all these indicators. So what do I think is going to happen next? Now, these Fibonacci retracements, I've mentioned before that this is a macro, this is a very long-term one. So I basically take this Fibonacci retracement from the bottom of the 2020 March crash, that's the March 2020 crash when it bottomed out, and all the way up to the top to the current all-time high of $69,000. Now, if we look, just retrace what's happened. Okay, since the all-time high of $69,000 on the 10th of November, we've had a crash. Briefly kind of stopped around here on this level, which is the 0.786, that's about $55,000. Fell below here and kind of took a bounce off previous all-time high of like just under $42,000. And we had a bit of activity, a lot of activity around that zone here, around the 42. So what seemed to happen was it dropped below to the 0.5, which is around $36,000. So that Fibonacci retracement went back up and was rejected from 0.618, back down, took a bounce off this 0.5, back up, and it bounced up and down here until eventually breaking through, only to get rejected from this. This is now the most important line on this graph here. That's your resistance line from all-time high. Another rejection here, multiple rejections actually here, couldn't get above this, around $47,500. Fell back down all the way here. And around the last time I made the video a few days ago, I was kind of commenting on there's a lot of activity here, and then eventually, of course, slipped down here. Now the next, on that Fibonacci retracement, the next level there is 0.236. Remember, I start this, the zero of this Fibonacci extension is like the bottom of the March 2020 crash, all the way up to the top of the current all-time high. I'll show you, I'll just zoom out and show you. So remember, this is the daily, and this is Kraken. So there's March 2020, that's my zero. I bring up here, so that's my 1, so it's the all-time high, and this is where I'm taking this from. But we do seem to, it's actually been pretty reliable so far, just all those, the way it's accumulated around those levels, like bounced in between the 0.5 and the 0.618. Anyway, got rejected from this line, and accumulated around the 0.382 for a while, and now we're going back down. That looks like we're heading for 0.236, that level. So that level would put us around $19,000. And of course then that'll be the first time, I think it's pretty sure it's the first time in Bitcoin's history where you go into a bear market and we end up lower, like the bottom of the bear market, if it bottoms under $20,000. Like there's no guarantee it might not. This could be the bottom. I don't think it is. I'm just skeptical. I'm just cynical. I think it probably is going to invalidate that pattern that we've seen before. It'll be the first time that Bitcoin enters a bear market and it bottoms lower than the previous all-time high of the previous bull run, which is in 2017. Okay, so just to kind of look at it from a different point of view and give a bit of clarity, I just want to look at a cleaner graph here. This is the Coinbase chart, and I'm going to switch to the weekly. Okay, now I just want to explain what I mean by that again. So what we have here, this is, I'm going to keep this nice and short, this video, but I just want to show what's happening. There are people talking about lengthening cycles. Typically Bitcoin's bull and bear markets, their cycle, a cycle basically to me is like a bull and a bear run at the same time, or not at the same time, it's like a bull followed by a bear run, right? So a full cycle, a 4-year cycle. Typically the catalyst for this is the halving event, again, which I mentioned already. It's when the Bitcoin supply gets cut in half. Currently 6.25 new Bitcoins are mined or released, brand new Bitcoins every 10 minutes. And before that it was 12 and a half, before that was 25, and so on. So the last halving we had, these blue lines are the halvings. So they happen every 4 years. So this one here is May 2020, and before that then we've had one in July 2016. So what happened was the Bitcoin supply got cut in half. So cut from 25 new Bitcoins minted or mined every 10 minutes down to 12 and a half. So what happened then is, because the supply was cut in half and the demand was the same or increased, you got this big bull run, because just the basics of economics, supply and demand. If something is in scarce supply, the price goes up. Whether it's I don't know, oil, like, you know, plastic, whatever, food, doesn't make a difference. The obvious one is probably property. So what happens here is the supply gets cut in half from 25 brand new Bitcoins made every 10 minutes to 12 and a half. And then obviously the price increases. Tops out about the end of the next year. So this was mid 2016, about 18 months later, it tops out and then collapses and goes into its bear run. Kind of recovers a bit in 2019 and stopped again. A lot of people actually think that this is the start of a new bull run, and it would have probably kept going, or this pattern was unusual because this here is March 2020, which is considered a black swan event, obviously because of what's going on in the world and what happened. That all basically during that time all markets crashed. They were basically, oil went from costing a certain amount, it went into like a negative value. So then the next halving occurs in May 2020, and then so Bitcoin tops out at the end of 2021. So just a quick recap, you have a halving event, Bitcoin supply goes from 25 new Bitcoins getting mined every 10 minutes to 12 and a half. So creates a supply shortage, supply and demand, just, you know, less supply, demand is the same or increasing, goes into a bull run, tops out in December 2017, a year and a half later. Then we have another event, another halving event, the Bitcoin supply gets cut from 12 and a half to 6.25. Similar events, well, the economic landscape of the world, considering what happened for the last 2 years, wasn't the same. And there was, you have like inflation run rampant, and they were, digitally printing dollars in the States. But sure enough, the same thing again. You're having halving event in May 2020. Bitcoin tops out the 10th of November 2021. So, and now it looks like it's going into bear market. So in conclusion, we're in a bear market. We have been in a bear market for the last basically 7 months. And now is the time to keep dollar cost averaging. Everyone will tell you not to buy this. The money is not made in the bull runs. The money is made in the bear markets. Now that it's cheap, continue to dollar cost average, stock up, because then inevitably when it comes good again in like, a year to 18 months to 2 years, who knows, when it comes good again, that's where the money is made, and that's where you can sell those higher prices and take some profits. That's pretty much it. If you've got any sort of value, like, subscribe, leave a comment. See you in the next one. Good luck.